Hello and welcome to another update video about MATIC. We take a look at the latest structure. The overall, the bigger picture hasn't changed at all. Quick summary, we have a 5 up, 3 down pattern that's pretty good. It gives us a pretty good edge in the market. It means that we have potentially a pullback in an overall uptrend to keep it very short. So 5 waves up, typically indicative of the larger trend. So the market has indeed managed to move in 5 waves to the upside. Even though it's only a leading diagonal, these typically cannot be trusted. I have to say that again and again. But it's one of the best setups still that we have. We have an overall lack of impulsive price action in the altcoin sector. So that's generally a problem. And but that's typically how altcoins move, right? They like to move in diagonals. That's why they break often. That's why altcoins are more risky, okay? Let's face it. But we have 5 waves up, 3 waves down. I think it is one of the clearest patterns at the moment and clearest structures currently in the crypto market. Doesn't mean that because of that it has to hold, okay? But it is where we can recognize the waves quite clearly. So it gives a bit more confidence. There's always a level, however, where we say that this overall bullish thesis is has to be basically thrown out of the window. So the invalidation point is obviously down here at 50 cents, but normally we don't want to wait that long because that's the beginning of the wave 1 to the upside, the beginning of that 5 wave move to the upside. That's always the invalidation point, but there's typically a warning that we get before that, and that's the break below the 78.6 Fibonacci retracement. It's at 58.3 cents. Once that level breaks, it's an indication that things are already starting to break down. That's typically when I will start to see the setup, the so-called 1-2 setup, as unreliable, very unreliable, and where it reduces significantly, quite substantially in likelihood. So it's worth watching that 58 cent level there. If we form another low in this support region, there is more support available at 66.7 cents, 65 cents. That could be a strong one. That's the 100% extension level of the A wave. And it's a previous support level here, previous Fibonacci support. So there is some Fibonacci confluence there. But yeah, I mean, at the moment we are investigating, observing, exploring if the low is already in, because the minimum requirements for this pullback, they are fulfilled. It actually looks quite good. We even have 5 waves down in the C wave. So I'd be happy if the correction is over, but it takes a little bit more evidence to really confirm that a low is in. So we go to the 15-minute chart, and then we can see here on the 15-minute chart that there is a potential 5 wave move up unfolding. But I mean, my idea is, or my mindset is, that I'm not going to confirm a low in place until I see 5 waves up complete. That would be the first level of confirmation, and it just needs one more high, and the 3 wave pullback complete as well, which would form a higher low. So the idea is that obviously after the market rallied here in 3 waves over the recent days, I did update you accordingly and reached the 81 cent level, which is the 1.618 extension of that wave 1, which is ideal. Okay, then now we are in a pullback. I gave you that support zone yesterday. Ideally, the price should hold above 76.2 cents. Okay, if it fails, then there's still the golden ratio level available at 75 cents. It's just that below that level, there's nothing really bullish left on this chart. In the short term. So there is this important support box which ideally holds to give us a 5th wave to the upside. Again, what works on the larger, on the macro, that works on the smaller time frame as well. So it's essentially that 5 wave move up that we need to see to indicate that, okay, the market is continuing with the uptrend. If it's only a 3 wave rally, it's a so-called corrective rally, and would indicate that the downtrend isn't finished yet, the local downtrend, and we could test the lower support regions, which I mentioned a few minutes ago, 66.7 cents, maybe even here, round about 64.9 cents as next support levels. But at the moment, to be honest, we've got 3 waves up, and we have price action here that looks rather like sideways consolidation, a bit like a corrective pullback. That's sort of at the moment what we'd like to see in a 4th wave. I wouldn't have a problem with the wave 4 going a little bit more into the support area, a little bit more of a healthier wave 4, possibly to 77.3 cents. And then we could get one more high And if one more high forms, the next levels to watch are 82 cents and 83.3. I think the 83.3 cent level would be ideal. 82 would be a bit weak, but acceptable. They are the next Fibonacci levels to watch basically. But let's first see if micro support is holding. I think they are the parameters we need to watch today, and then obviously observe in case we get a reversal to the upside. Here we can take a look at these Fibonacci extensions. Once we have those 5 waves up complete, we can watch for a 3-wave corrective pullback in an ABC structure, as already outlined here on the chart. And then I will be able to work with those initial 5 waves to the upside and add a support area for the subsequent pullback. But for now, it's looking good. But yeah, 76.2 and 75 cents are really the relevant main support levels here in the very short term. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.